This week, the US stock market didn't crash, it didn't surge either, but it did send a message. Investors are still willing to buy, just not without protection. The S&P 500 slipped for a second straight week, even as energy surged and a handful of big names ripped higher. So what actually moved the market, and what should everyday US investors watch next? Market overview. Let's start with the scoreboard. From Tuesday through Friday, the S&P 500 finished down about 0.4%, the Dow fell about 0.5%, and the Nasdaq dipped about 0.1%. That might sound boring, but the way we got there wasn't. This was a week where headlines mattered and confidence had conditions. When investors feel uncertain, you usually see it show up in two places first: currencies and safe havens. And that's exactly what happened. The US dollar softened and gold pushed to fresh highs, classic signs that big money is staying cautious, even when stocks are collapsing. For households and retirement accounts, weeks like this are a reminder: markets don't need a recession to get choppy, they just need uncertainty. Now let's talk about the winners. 5 US-listed stocks that stood out with strong weekly gains. 1. Moderna, ticker mRNA. Moderna jumped about 16% on the week. The catalyst was renewed optimism around its cancer vaccine work with Merck, especially as investors refocused on Moderna's oncology pipeline. What it says about the sector: biotech still trades on clinical confidence. When the narrative shifts from cash burn to real pipeline value, money can move fast. 2. Fortinet, ticker FTNT. Fortinet gained about 8% for the week. The spark was straightforward. An analyst upgrade helped change the conversation around cybersecurity spending and positioning. What it says about the sector: security remains one of the last must-pay categories in business tech budgets, especially as more work shifts to hybrid cloud. 3. Meta Platforms, ticker Meta. Meta rose about 6% on the week. This was part of a broader late-week bid for large-cap tech, with Meta outperforming peers in Friday's session. What it says about the sector: when markets get nervous, investors often crowd into companies with scale, cash flow, and clear pricing power. 4. Procter & Gamble, ticker PG. P&G climbed about 4% for the week. Why? The company's results and commentary highlighted pressure in parts of US consumer spending, especially among lower-income shoppers, while maintaining key outlook items. What it says about the sector: staples can act like a ballast, not because they can't fall, but because investors look for durability when headlines turn messy. 5. Nvidia, ticker NVDA. Nvidia added about 1% on the week. Support came from reports tied to China-related H200 ordering preparations, which kept demand narratives alive in the AI hardware cycle. What it says about the sector: even in a cautious market, the AI build-out remains a magnet, but it's also headline-sensitive. Now for the other side, 5 notable decliners. 1. Capital One, ticker COF. Capital One dropped about 9% for the week. The company announced a plan to buy fintech Brex, and the market weighed integration risk along. Does this improve stability or add new uncertainty? 2. West Pharmaceutical Services, ticker WST. West fell about 9% on the week. A key storyline was its smart dose transaction, selling certain manufacturing and supply rights, while investors looked ahead to what future guidance could imply. Investor concern: medical suppliers can be steady, but when product mix shifts, valuation can shift with it. 3. Intel, ticker INTC. Intel declined about 8% for the week. The sharp move came after a disappointing outlook, which cooled enthusiasm that had built up earlier. Investor concern: for turnaround stories, guidance matters more than headlines. Markets want proof, not potential. 4. Goldman Sachs, ticker GS. Goldman slid about 5% on the week. Financials were a key drag, and Goldman was one of the names cited as pulling the Dow lower on Friday. Investor concern. Banks and brokers are sensitive to rates, regulation, and market activity, so they often amplify macro uncertainty. 5. Caterpillar, ticker CAT. Caterpillar fell about 3% on the week. It's a classic economically sensitive stock, strong when growth confidence is high, weaker when investors get defensive. It also contributed meaningfully to Friday's Dow decline. Investor concern. Industrial demand is tied to business spending, and business spending is tied to confidence. Here's the big theme of the week. Stocks were steady on the surface, but investors were buying with caution underneath. You could see it in the weekly index returns, small declines. You could see it in the market's behavior, headline swings. And you could see it in where money flowed. Energy was the standout. The S&P 500 energy sector gained about 3.9% for the week, its best weekly run in months. And late in the week, attention stayed on U.S. energy fundamentals as a major winter storm threatened production and pushed traders to reassess supply risks. For everyday investors, the takeaway isn't chase energy. It's simpler. When markets feel uncertain, money doesn't disappear. It rotates toward what looks resilient, necessary, or priced for risk. That's why this week matters, even though the indexes barely moved. Looking to next week, here are 3 things investors will be watching closely without pretending we know the outcome. 1. The Federal Reserve meeting. Even if rates don't change, the language can shift expectations around borrowing costs, mortgages, and business investment. 2. A heavy slate of major earnings. When the biggest companies report, it affects not just traders, but index funds and retirement plans across the country. 3. Federal shutdown deadline risk. Markets don't always react the same way, but deadline uncertainty can weigh on confidence, especially when households are already sensitive to costs. If you're building wealth slowly through a 401k, an IRA, or steady investing, weeks like this can feel noisy. But the goal isn't to react to every headline. It's to understand what the market is rewarding, what it's punishing, and what risks are showing up under the surface. If you want a calm, no-hype recap every week, subscribe. And in the comments, tell me, which stock or sector are you watching right now and why?